Received a GST notice after using UPI for your business? Feeling overwhelmed? In part 1, we covered why these notices are being issued and what initial steps to take. To quickly recap, recent GST notices are being issued based on your high UPI transaction volumes, especially when the total value of such receipts exceed the threshold. In part 1, we discussed this at length, including what you need to do and what you shouldn't if you get such a notice. If you haven't watched it yet, link in the top right corner. Now, in this video, part 2, let's talk about a powerful solution that can drastically simplify your GST compliances, the composition scheme. Imagine a simplified way to pay your GST. That's the composition scheme. Who is it for? Small businesses like manufacturers, traders, restaurants with an annual turnover up to 1.5 crore, service providers with an annual turnover up to 50 lakh. Remember, this limit is lower for certain special category states or union territories. The key idea is, instead of paying GST on every sale and availing input tax credit on your purchases, which can sometimes get complex, you pay a fixed lower percentage of your turnover. 1. Reduced compliance burden. Less paperwork because you just have to file one quarterly statement and one annual return, in contrast with regular schemes, multiple monthly or quarterly and annual filings. 2. Lower tax liability. That is, you pay a fixed rate of GST on your turnover. For manufacturers and traders, rate of GST is 1%. For restaurants, 5%. For other service providers, 6%. And you need to pay this directly to the government. To put it differently, you can't collect this from your customers. 3. Easier record keeping. You don't have to maintain as detailed records as regular taxpayers because you don't avail input tax credit. 4. Focus on business. You spend less time on tax complexities and more time growing your business. Now, let's look at a practical example to understand the real difference when comparing composition scheme with the regular scheme. Imagine you own a boutique in Bengaluru. You sell beautiful ethnic wear and have an annual turnover of say 45 lakh from only intra-state sales. That is, you sell within Karnataka. You regularly buy fabrics, tailoring services and other supplies from other businesses, paying GST on those purchases. Since your turnover is 45 lakh, which is more than the threshold, you must register. First, regular scheme. Let's assume GST rate on your sales is 12%. So 12% of 45 lakh would be 5.4 lakh. This is the GST you collect from your customers. Let's assume you paid 1.6 lakh as GST on your inputs like fabrics, stitching, rent and other supplies throughout the year. So the difference between these two, 3.8 lakh, is the GST that you pay to the government. Now coming to compliances, you would be required to file at least quarterly GSTR1 with an option to file IFF, Invoice Furnishing Facility, for the first 2 months of the quarter, file quarterly GSTR3B, maintain detailed records and also issue proper tax invoices. Now the composition scheme. Because you are a manufacturer, you have to pay 1% of your turnover as GST. So 1% of 45 lakh would be 45k, and this has to be paid out of your own pocket because you can't charge this to your customers. Next, input tax credit. And this is crucial. If you choose composition scheme, you can't avail input tax credit. So this 1.6 lakh you paid as GST on your inputs would be an additional cost for you. So in composition scheme, the total effective financial impact would be 2,05,000. Next, compliances. In stark contrast, if you choose composition scheme, you have to file quarterly statement in CMP 08, annual return in GSTR 4, issue bill of supply instead of tax invoice because you don't collect GST from your customers. So in this scenario, the composition scheme is financially more beneficial for you because you save a substantial 1.75 lakh in addition to the massive reduction in compliance burden. This composition scheme also comes with certain conditions and limitations, some of which we have already seen from the use case. 1. You can't avail input tax credit on your purchases. So if you pay higher GST on your inputs, then this may not be ideal for you. 2, you can't sell outside your state whether you have a physical store or you sell online on your own website. For instance, if you are registered in Bangalore, you can't sell outside Karnataka. 3, if you intend to sell on e-commerce platforms like Big Basket, Meesho, Amazon, etc., you can't sell outside your state, but selling on your own website within your state is fine. 4, you can't issue a tax invoice because you cannot collect GST from your customers. Instead, you issue a bill of supply. Lastly, and this is important, not all businesses are eligible to opt for this composition scheme. For instance, manufacturers of ice cream, aerated water, tobacco products, and pan masala are not eligible to opt for this composition scheme. Next, how to register. We have already discussed this process in brief in part 1 of the video. To reiterate, you'll have to visit the GST portal. When you fill out your application form, instead of regular scheme, select composition scheme. Documents required would be your PAN, Aadhaar, proof of place of your business, etc. Once you are registered, you would get your GST identification number. To quickly summarize what to do if you have received a GST notice: 1. Don't panic. 2. Analyze your UPI transactions and compute your turnover. Now, how can you do this? We have discussed this extensively in part 1. 3. Check if your turnover and business type qualify for the composition scheme, because certain businesses are not eligible, and also rate of GST is gonna differ depending upon the nature of your business. 4. Determine if the composition scheme is the right fit for you. Whether you go for regular or composition, make sure you use separate UPI ID for all your business transactions. To put it differently, do not mix personal and business transactions in a single UPI ID. This was all about the composition scheme. Hope it was informative. Thank you for watching.